It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey everybody, it's Tyrone Jackson, the wealthy investor, and welcome to another fabulous episode of Trading Stocks Made Easy. I first want to say thank you to all of you who've listened to me for over a decade. Believe me, a show like this has evolved many times, and many of you, when you stop me on the street or you see me in the airport, you say, I love your podcast. And I just want to say thank you all for listening. There are a lot of people in the YouTube universe that say, I'm a great stock market trader, and there's a lot more competition of people who are vying for your attention, and I appreciate the fact that you stay with me. So, since today's episode is essentially about change in the world, changing markets, changes in stocks that are publicly traded, companies that are publicly traded, I thank you also for being open. So this episode is actually inspired by one of my closest friends that I spend time with, and we were talking the other day, not just about change, but about the rate of change, how quickly our world technologically is actually changing. And it got me to thinking about investing and what companies I think will be around in the next 5 years and what companies are going to be extinct. Now, I've been trading for over 25 years in the stock market, and I love it. I consider trading and investing to be a lifestyle choice. I can't imagine going more than 2 days and not checking in on the market as a whole. What I've been fortunate enough to do, and I call that my inner junkie, my inner stock market junkie. And I am so proud, and I'll admit this to you and only you, of how many stock market junkies I've created. People who now couldn't imagine a month without earning $10,000, $15,000, or more in the stock market, selling covered calls, volatility trading, and collecting dividends. They couldn't give it up if they wanted to. So hopefully when you're listening to this show, you're thinking about you, your portfolio, and how much money you have coming in on a regular, consistent basis trading in the stock market. It actually is a lot of fun. But we must be open to change. You know how I'm always telling you the key to your success is having more residual income in your life, because you never know when your job or other forms of income are going to go away. Well, here's what we know about the stock market. We can make money when stocks go up, go down, and stay the same. And that's what essentially makes the stock market easy. Only one of three things are going to happen tomorrow morning to your favorite stock. That stock is either going to rise, it's going to go down, or it's going to stay relatively the same. What some of you are discovering about covered calls is they are constant. Whether the stock goes up, goes down, or stays the same, there's always an out-of-the-money call that you can sell. The out-of-the-money covered call, of course, is selling an option to someone else to buy your shares away from you, right? That's obvious. But as the Wealthy Investor Program actually evolves, we are learning that there are more than one way to trade the same stock. In fact, there's about 7 ways to trade the same stock for residual income. So we know covered calls is one, volatility trading is another, and now some of you have recently discovered setting up straddles as a form of making money. I just want to address that because some of you have fallen in love with straddles these days, and I want to tell you why they're working. Straddles cover and capture volatility. So if you have a call and a put, or 10 contracts of a call and 2 contracts of a put, you're willing to make money off the volatility that already exists in the stock. So you remember when you used to buy 50 shares and put in a sell order when the stock went up $2 and the software would sell it for you? Well, with a straddle, we're essentially doing the same thing. We're capturing the inherent volatility in a particular stock, except we're using options to do it. Okay, so I was talking to someone about this not too long ago, and they were saying, wow, there's so many angles to trade the same stock. And I wound up saying, no, it's the same volatility that goes into trading the shares, except you have two instruments. One that increases in value exponentially when the stock rises, and one that increases in value when the stock actually falls. Now, you know the year that we're in, you know who's president right now and who's creating the uncertainty in the entire marketplace, causing the stock market to disrupt its normal pattern of bullishness. And we're seeing enormous amounts of increased volatility on a daily and weekly basis. So straddles are quickly gaining popularity with the wealthy investor community because of all this volatility and your ability to pick off profits almost every day, every other day, certainly every 3 days, in addition to your cover call writing. So, as the market maintains this level of volatility, which I think we're going to see for the next 2 to 4 years, straddles are going to become almost, but not quite as important as cover call writing. Now, here's another layer to that I want you to think about. If we're making money off of selling options and volatilities on shares, as well as volatilities on, let's say, straddles, some of the companies that we're trading right now won't even be around in 2 to 5 years. Now, most of the companies that we're trading, I believe, will be around because we're trading members of the S&P 500 and the Dow Jones Industrial Average. And to make it to be part of one of those indices, you've got to be a company of reputation in order to be placed in those indices, right? But I want you to think for a moment about investing in the future. Now, what companies will be hot, alive, pumping, thumping, and jumping in the next 5 years? I don't know. I'm just trying to make it to Christmas here, gang. That's all. Keep my profits coming in and make it to Christmas because with all this volatility that's coming around, there is money to be made for sure. But I'm just going to tell you and mention a few names, and then you tell me at some point when we meet or when you're doing one of my online classes, what you think about this, okay? When I was growing up, there was a company called Photomat. Now, for those of you who don't know what Photomat is or was, we used to take pictures on disposable cameras, but those pictures had to be developed somewhere. And someone came up with a brilliant idea of these little huts that were placed in shopping malls in and around them. And you would take your disposable camera and that person would say, come back on Thursday and your photos will be developed. Then inside Photomat, someone came up with the idea of 1 hour photos. You drop it off at 12, your photos will be ready at 1. You had to pay more for that service, but Photomat was a huge success. But what happened? Well, as photography changed and the world started to go digital, there was nothing to develop. There were just cameras that took in images instantly and you can enjoy them. Well, what do we have today? I'm not telling you anything that you don't know. We have the ability to take a picture instantly. We can now photo edit it, place it on social media, and hundreds of thousands of people can see that photo around the world if you want it in an hour or less. Is that amazing? In fact, what's amazing to me, for those of you who follow The Wealthy Investor on social media, when I post something on the Wealthy Investor's Facebook page, instantly I get thousands of people who respond. Now, there's some people as part of this generation, they take that for granted. They only know that aspect of the world. But I can tell you there's part of me that's still marveling. Why? Because I never have to send anything to Photomat. So some of the companies that don't adapt to the future disappear. Get it? If you don't adapt, you disappear. For example, does anybody remember a publicly traded company called Bed Bath & Beyond? Remember, they used to be in these super malls. We used to call them big box stores, and you'd be able to have, Bed Bath & Beyond and Staples and Best Buy. And where is Bed Bath & Beyond now? it is gone. Why? Because of a shift in consumers' buying habits driven by technology. One of my favorite retail stores of all time, I always thought they'd be around, was a store called Pier 1. Because if you were an upper middle class person and you wanted to have really beautiful plates and kitchen designs and candles and everything that showed off your home, you could get good deals at Pier 1. Not there anymore. Why? Well, a company called Amazon has been the recipient of consumer buying habits. And obviously, we don't go to Amazon for books anymore, just books. We go for all sorts of things, everything under the sun that you could imagine, right? Okay, so see, these are some of the companies that weren't able quite to adapt to the online world. And what else is probably going to be gone? Well, AMC movie theaters and Regal movie theaters. Remember where you go in and there would be like 14 movie theaters and you'd have to find out where your theater was, and maybe there was a way you could see one film and then another film if you went from one cinema to the other? Right. Well, now, since the public is hooked on streaming again due to technology, we don't think about going to the movies quite as often. Although this past Memorial Day was one of the biggest Memorial Day weekends on record for the movie business because people really do want to get out. So in Wall Street terms, we call this migration of entertainment dollars. Human beings have a fundamental need to be entertained, right? They're always going to spend money on live entertainment. Where will that money go? Well, I'll tell you right now, in the last 2 years, we've seen entertainment dollars migrate into sports. Yes, people are showing up at record numbers at their favorite sporting event: football, basketball, soccer, tennis. And guess where billions of dollars have also migrated? That's right, to Beyonce and Taylor Swift, right? They're seeing record ticket sales in part due to the fact that we're not going to the theater. So if you're not going to the theater as much and you want to go out and you want to be entertained, we're seeing families pay hundreds of dollars to go see Beyonce, hundreds of dollars to go see Taylor Swift, because the money that they would ordinarily spend on movies, well, the movie theaters just aren't there that much. I also believe that people want to get out of their homes. As much as we want to be entertained in our homes, we like the experience of going out into the world, being with thousands of other people we don't know. That is a collective experience. So no Photomat, no Pier 1, no Bed Bath Beyond, and we might not have movie chains for much longer. What does this mean as an investor? Well, to keep it really simple, it means as new forms of entertainment are being birthed, there'll be more billionaires made from this new technology than ever before. See, you and I couldn't afford to go out and finance a big store like Bed Bath & Beyond, but we might be able to finance our favorite radio station, online radio station that just plays hip-hop music and interviews the artist, right? Now, I won't go into broadcasting and how that's changing, but we're going to see a lot more streaming services devoted to music and certain entertainment genres than ever before, and people are going to be willing to pay $6, $7 for that digital entertainment. But in order for that digital entertainment network to have a worldwide impact, it's going to have to start producing live events. Your job and my job is to participate and share ownership when these new companies bring this new technology and these new forms of entertainment to the world. Because some of these companies that are about to be formed are going to earn billions just within the first 2 to 5 years of existence. The world is changing. Who's adapting? That's what this episode is all about. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
We are talking today on the Trading Stocks Made Easy podcast about change in the world and change in companies that are publicly traded. Now, since in the first half of the show I talked about change in stores that are no longer around and brands that are no longer around, I'm just going to give you 3 examples of companies that I think will be around, are investable today, okay? The first one on my list, in no particular order, by the way, is Costco. I think Costco will be around for at least the next decade. No matter what Amazon does, there's nothing like having a discounted retail experience where you can go in and buy avocados in aisle 12 and then a blanket for your bed at 60% off everywhere else, all in the same store. Costco knows this. They've invested billions of dollars in making sure that their stores are in regions where people want to have a collective experience. Go into the store and actually shop. The items that are on sale at Costco, you'll notice if you actually have a membership, they always tell you they're limited. We only got X amount of units, right? They do that intentionally so that you get in the habit of going to the store, catching a deal, and taking an action. I myself am a huge Costco fan. I love it. I love the big screen TVs and all of the electronic devices, as well as being able to get 17 steaks for $35. I don't get the 17 steaks anymore because I just don't go through them. But like all consumers, whether you're rich or not, you love a deal. I think Costco is going to be around for quite a while. I think the 2 major credit card processing companies, Visa and MasterCard, are going to be around for a while. I think whatever the new forms are of currency exchange, they will buy some of those platforms. There's a saying on Wall Street, the big fish always eat the little fish. We call that, in financing terms, consolidation. There's going to be a lot of consolidation in the credit card processing space. Visa and MasterCard have the brand recognition to do that. They have the money to buy these smaller technologies. I wouldn't be surprised if they own Zelle at one point, or at least own 50% of it, because they're all about consolidation and getting bigger. Yes, I do believe that Amazon.com will be around for the next 5 to 10 years, although there's always some young upstart seeking to sell things cheaper to the public the same way that Amazon does. But Amazon will either buy that company or, as we say on Wall Street, they will buy a stake in that company. And one industry, not necessarily one brand, that I also think will be around in the next 5 to 10 years will be the insurance business. Now, it doesn't have to be Progressive. It doesn't have to be Allstate, but the insurance business is regulated, but also they get to do what they want. And it is illegal to have a car on the road and not have insurance. It is illegal to have a home and a mortgage and not have insurance. Therefore, insurance rates will probably continue to rise. And did you know that when you discover a discount insurance company and you go, why are the rates here 30% less than the big boys? It's because the big boys started that company or they have a stake in that company. Therefore, people who are looking for a discount, they'll take those dollars, and the big brand names, they'll take those dollars too. And have you noticed that the marketing of a company like Progressive is more like a TV show? If I say the name Flo, you know who Flo is now if you watch television at all. The Progressive brand is no longer just about Flo. It's about Flo and her cast of characters who now help people out getting discounts on motorcycle, car, and bundling insurance. They've basically made a TV show out of marketing that brand. So you enjoy being entertained by those people, and you don't even realize they're a cast, but you recognize them. They're synonymous with a brand. Bravo for those actors who can now make a living on the progressive TV show. Now, when I was also growing up, I remember that there were record stores, which we know are out of business now because everybody gets their digital downloads and get information from Spotify, and they love streaming. But mark my words, 5 years from now, that business is going to change. So what do? Your job is to study the stock market, study the trends, and most importantly, follow the top line revenue of these companies that are growing. Because one of the ways in which they are growing is by acquiring other companies. Okay? So there's a lot of running room for you and I, regardless of your financial situation now. What will really pay off for you is if you get in the game. To get started investing in the stock market, you really don't need more than $1,500, right? Because there are stocks that are still under $100 or $120 a share that are doing very, very, very well. Your job is to get that financial education, continue to make the stock market a way of life, and you'll always be ahead of the game. Why? Most people trade time for dollars, and we know that that formula does not get you rich. Why? Because you only have but so much time in the week, right? But if your money is constantly working for you in Dow stocks, S&P stocks, and they pay a dividend, you will always be ahead of the average person. Stay open, stay positive. You were meant to not struggle in your life, but have wealth and financial freedom. And I am proof of that. Thank you so much for listening to episode 255 of the Trading Stocks Made Easy podcast. And I'll see you in Maui, which is not too far away from now, or in WI Trade School, or on my next advanced stock and options trading course. Make sure you go to thewealthyinvestor.net, sign up, and join our community for free, and that will put you in touch with the stock market on a weekly basis. Talk to you soon. Bye-bye for now.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button, and you'll automatically receive our next episode.